The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking your trading day off right here with us. And we pick things up in positive territory. Markets clawing back some of the losses yesterday. This is a 15-minute chart we have. Quite a drop-off from 61.35. You're talking about almost 130 points. 230 points. I was saying 130 points. That's only 2%. That's not 230 points. The S&P's down to the lows. Nonetheless, we're almost 80 points off of that low. You have the S&P's technically positive by 42 points or 0.7%. Today could be an interesting one. Are we going to get any follow-through? Are you going to get a relief rally? We will find out. NASDAQ 100. We're positive by 142 points or 0.7% right now. But as you see, all we're doing is trading into where we were pretty far into that drop yesterday. Dow, quite the escalation to lower prices yesterday. You trade lower by about 1,500 points in the Dow. You're trading back above 43,000 this morning. And the Russell, you talk about volatility. The Russell up more than a percentage point right now. But yeah, I think the Russell at one point, I was doing the program yesterday, live, 3 to 4. And I think the Russell was 5.3, 5.4% down at one point on the peak low of 22.35. Nonetheless, you're positive by more than a percentage point. Bitcoin, similar action. You trade down from 105 to 98,000 yesterday. You're back at 102,000 for Bitcoin. Crude, a bit as well, $70.49. We got a little bit of GDP numbers this morning. Economy firing on all cylinders as usual. Now, keep in mind, the gold contract is showing that it's down $41 for the session, but the gold contract includes the action as of yesterday. Okay, so yeah, you're down, but gold, technically I think the futures close at 130 on the gold contract is what it is. Crude could possibly be 230. I remember that when I was trading that more often. But yes, nonetheless, you have gold basically at session lows. You're going to show down $41 until that session technically closes at about 130 for futures. But nonetheless, gold makes it below 2,600 last night. We're trading at 26.11 right now in gold. And the story of the afternoon, the story of the market, yields, and then we'll jump to the dollar. But you talk about it. You get the 10-year right now, 4.54%. 4.54. You talk about it, man. Exactly. Just checking. It was there when I was up early this morning. We're sitting at about 4.54, right where we were. You take a look at the daily, you break below. Right? Who would have said that yields would be above anything we've seen going back to June? Meanwhile, the Fed has cut 100 basis points now. But boy, I'm sure you heard it yesterday afternoon if you're watching the program today. So the Federal Reserve, they cut by 25 basis points. That brings their easing to 100 basis points. Their range is now 4.25% to 4.5%. And they're looking for about two cuts next year, down from 4. What is interesting is that the market was already pricing it that way. We've been talking about, right? What is the market pricing in terms of cuts for next year? And bring it over. You can Google it yourself, folks. It's, I say it's not the Holy Grail. It just gives you a guide of where the market generally is, as they put it, okay? Implied 30-day Fed funds futures prices, okay? Probabilities of changes to the Fed rate as implied by a 30-day Fed funds futures price. Now, the next meeting coming up, January 29th, 91% chance that we do not cut. 9% chance we cut. More interesting, you go out a year to December, and the market right now is pricing in 1 to 2 cuts as the highest probability. Okay? Now, what's interesting is you can look where we were a month ago. Okay? And a month ago, look at the probabilities for 2 cuts. Right now, it's 29.2%. A month ago, it was 29.1%. Now, yes, the ones around it have changed. Okay, it's now weighted much more so to maybe 1 to 2 cuts, versus a month ago it was 2 cuts, maybe 1 or 3. A pretty even distribution curve a month ago, whereas right now you're lining up with an even distribution curve maybe around 4 to 4. But as you can see, not a huge change from where we were a month ago of where this market thinks we'll be over the next year. So it's going to be interesting if you get actual follow through here, because yes, things changed a bit, but the market knew. It didn't know. Let's put it this way. The market was pricing that we were not getting 4 cuts next year. The Fed confirmed that. Not a huge need to reprice everything when the market was already priced for less cuts than the Fed had implied at their last meeting. So with that said, you jump over to the dollar holding above 108. The dollar yesterday hit a high that we have not seen since 2022, folks. You got to back it up on the 3-year weekly. And you're talking about November of 2000. No, excuse me. You got to go back to this large bar. Yeah, November, early November, when you traded in the span of a week from 111.27 all the way down to 106.28. And we are back to that level. Now, the highs that we just hit were 108.07. We're at 108.04. And what to keep in mind is that recent 108 spike, you can see when you pull it up on the chart. Okay, this is an hourly. Yeah, you got above 108, but you're talking about getting above 108 in the dollar index for a split second at 4 o'clock in the morning, versus we're now sitting at 108.56. We're holding that level. That move is from 108.26. We're at 108.05, and that move is coexisting with higher yields to keep that dollar stronger at the same time, right, as you have the ECB cutting down to 3%, more cuts there as the economy over in Europe is struggling. And then you have the Swiss National Bank, we've talked about extensively since last week, a 50 basis point surprise versus 25. They getting ahead of potentially some problems with their currency. Too much strength can be a problem. All right, let's jump around to some of the numbers. Excuse me. We jump over to the headline we'll kick things off with. U.S. GDP revised up to 3.1% on stronger consumer spending. Just like the same article over and over and over, as in stronger consumer spending, man. The consumer and the consumer powers this economy, folks, and they are doing just fine right now. We'll see how we come through the holiday season. 6 days until Christmas. But yes, the GDP increased at 3.1% in the third quarter. This is the third estimate. Okay, that compared to a previous projection of 2.8. So bump it up. How about consumer spending? Marked up to 3.7 from 3.5%. Exports was a big number at 9.6%. July to September, the third quarter is what they're talking about, up from 7.5 in the prior estimate, entirely due to what? Services. Yeah. The report also showed one of the Fed's preferred inflation metrics, PCE price index, excluding food and energy, marked up slightly to 2.2%, and we get the PCE data due out Friday for November ahead of that. Nonetheless, this market, we'll see. It'd be pretty interesting if we could get back some of the action yesterday, but keep your fingers quick on the open, because what I will say is, yes, we've gotten a dramatic move, but when you look at where the market was already priced, Chairman Powell basically confirming what the market had already suspected, which was, yes, we were going to get a cut, but 2025 was a different story, and they've revised to that, and the market is adjusting accordingly. All right, folks, we get S&Ps up by 45, NASDAQ 100 up by 145. We'll take a look at some other equities when we get back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have markets in positive territory right now and jumping around. Oh, shame on me. Where is it? There it is. All right. You check out Micron. So Micron, they're going to be down more than 10% on the open. Yeah, and talking about weak second quarter guidance. Let's pull up the headline. Let's take a look at the chart real quick first, actually. Why not? So this is the daily. We are right now trading at $91. You spiked to 85. I take a look at the daily, okay, because where are we coming down to? There's your acceleration overnight. We spiked to 85, the market, clawing back some of the losses. We were talking about in the den, right? Tough day to report earnings after the bell. Going into, I don't want to call it a historic route, but it was a pretty big day to the downside. And Micron, it's got to be tough sitting in the C-suite of a public company like that. You know you're going to disappoint the market at 4 o'clock, and you're watching the S&Ps trade off almost 200 points. The Dow's off 1,200. The NASDAQ is what was the NASDAQ off 716 points yesterday, and you know that you're about to pop some bad numbers after the bell. And yes, you continue that trade lower after, so you're at $91. But yeah, you look at the daily, right? Where are we coming down? We're coming back to test this area right here, okay? And you go back even further, and look, you break below that area, you better watch out, all right? Because $80, $85, $90, you're talking about quite a run for the market this year, and you're going to have a stock like Micron that's barely positive this year. After being at 157, you're trading now at $91, and you jump over. And yeah, it's all about what are you going to do for me in the future. Revenue for the first quarter in line, but guess what? Not the case going forward. For the second quarter, revenue $7.9 billion, plus or minus $200 million. EPS of 143. Guess what? The market was looking for almost $9 billion, and earnings per share that on a percentage basis would be almost 30 or 40% higher, right? As if you got to go from $1.43 to $1.91, you got to add almost 50 cents of earnings, 48 cents of earnings. Yeah, quite a number. So that's all the story right there. There's the revision. Guess what? We're going to take in $1 billion less than the market thought, and we're going to miss on earnings to the tune of 25% light on the number, and that's going to recalibrate their pricing for sure. Yeah, NVIDIA shares yesterday held up pretty well, all things considered, right? You were coming into those numbers in positive territory. All NVIDIA did on Wednesday was spike to Tuesday's low, and NVIDIA actually above where it was on the close of Tuesday action. NVIDIA shares up by almost $4 today. You jump over to AMD shares, the chips, lower yesterday. You're higher in the pre-market, up to about 122. Let's check out some of the other equities. You talk about a rout across the board when you have the NASDAQ 100 down 700 plus points. Amazon trades down almost $15 from where you were pre-market to the close. You're sitting at 223.60 right now. So Amazon's going to pop about 1.5% on the open. Doesn't matter which one of these equities you choose, right? We saw it yesterday. Microsoft shares this morning, you're trading up at almost 442. You jump over to Google shares, up to 192 this morning. Meta trading up to 608 after being at 593. We check in on Tesla shares. Quite the rout yesterday, from almost 490 to 430. And you're trading today up another $10 at 450 right now for Tesla shares. And you check in on the big dog Apple shares, trading at 248 right now. All right, what other companies we got reporting? Now, you got Nike after the bell today, which is going to be interesting. But Darden, how about it? Up to 175. And yeah, raised the full year revenue guidance. They're talking about $12.1 billion, up from 11.8 to 11.9. The market was looking for about 11.97. So markets was looking for full year revenue of about just shy of 12 billion, and they come in at 12.1. And this thing is going to pop to about 176, which is going to be pushing exactly where you were, the highs at the end of November. And you take a look at this thing on a longer term basis, right? Boy, quite the rocket ship. You're going to be coming back to these highs right now. You're at 159.87 at the close, and right now you got a bid ask above 176, and it's pushing higher for Darden. Excuse me. And yeah, it's talking about Longhorn and Olive Garden. You know, we got quite the environment for restaurants here in southern Florida. And we got Longhorn, we got Olive Garden, we got them both in the malls here, of course. And it isn't interesting, they hit or miss sometimes on those two equities in particular. I should say those two restaurants in particular that they own. So Lennar continuing to struggle for some of these home builders right now. Higher interest rate, not what you want to see. Look at this one, man, right? So you close prior to the election at 177, and Lennar is now trading at 133. So they earned 406 a share on just shy of 10 billion in revenue, and the market was looking for 416 a share, 10.08. And yeah, it's I mean, look, it slide lower with the market. And you're going to break below now at 135. Let's see where we're going, man. Look at this. You're coming into the highs of last year at 133.24. It's exactly where we are right now. And if that doesn't hold, $100 is all right out there, man. Boy, nobody's ever going to give up their 30-year mortgage if we see rates rise from here. All right, we jump around to some other equities. As I mentioned, so you get Nike earnings after the bell. Okay, this has been a tough go-around, to put it lightly, right? Our man Basil Chapman, those nice symmetrical patterns. You talk about a symmetrical rise and fall on Nike shares. Nike trading at 2018 prices. Back in 2015, we were trading as high as $68. You're talking about a decade in Nike potentially of trading flat. We're coming into their earnings after the bell. You jump over to the Analyze tab, and you're looking about a $6 move priced in. Now you want to take a look in terms of where we are. Yeah, you want action through tomorrow's close. You're looking at about $6.26 of volatility for a $76 stock. So, yeah, 8% or so built into this equity as they come out with their numbers after the bell. And, boy, it's been a tough one, man, especially on some of these earnings, right? Let's jump back. Yeah, look at the last two. The one in June was really a recalibration, man. You trade down to $70 from almost $94, but even last earnings they disappoint. The prior one they disappointed as well. Let's back it up even further than that. Yeah, and a year ago they disappointed. Boy, when's the last time you had a big beat on Nike shares? You got to go back to December of 2022. There you go. Pretty remarkable. The last time you traded higher, we got to go back more than 2 years, and it's actually from a price point above where we are right now on Nike shares. So Nike will report after the bell. But other equities out with theirs, we got CarMax. There's a pop for you. Up to $89.50 on CarMax shares. And yeah, they earned 81 cents on $6.22 billion. The market was looking for only 62 cents on about $6 billion. So they beat their trading higher markets in positive prices. Let's see what kind of an open we get following yesterday's negative action. S&P's up by 49. We're coming back for the open, folks. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the opening bell. You have the S&Ps positive by 43 points right now. NASDAQ positive by 145. That's the NASDAQ 100. Dow up 320 and the Russell up 23. It's going to be an important day. Sent out in Market Insights earlier this morning. Are we going to get follow-through, or are the dip buyers going to get rewarded, right? We've seen this happen before so many times on the march to higher prices. I think it's 54 all-time highs we've made this year, something like that. It has been a steady rise in markets. That's the Russell. Back it up to the S&P. In terms of how many highs, we saw the pullback on August 5th, by far the most pronounced pullback that we've had in this market, where you pull back from a high of 57.21 to a low of 51.20. We all awoke on that Monday morning to an unwinding of the yen and the dollar and the relationship as markets accelerated to lower prices. And if you bought that dip at 51.20, well, guess what, folks? Over the period of about 4 months, you made 20% on your money in the S&P, right? You made 1,000 points from 51.20 to 61.63. We'll see if the dip buyers come in today, or we will see if the repricing that took place yesterday is going to continue. Now, the VIX had quite a spike, 28.32 from the doldrums of a 14 handle coming into the Fed. So you double in the VIX to 28.32, but just like that, we're almost going to get a 19 handle in the VIX. We're back to 20.63. Fear seeping out of this market, but we're a minute and 54 seconds into the trading day. We'll see where we go from here. And yeah, we come into holiday trading. We got Christmas in 6 days. You got New Year's. They both fall on a Wednesday this year. It kind of chops up the 2 weeks in between. We got 2 days left this week. Kids are out of school on Friday. Going to be a little bit of a light market for the next 2 weeks. And we'll see where we go into there. Let's check out some of the equities that are moving. Micron, yeah, down 14%. What was it, 9 billion they were looking for, and they're forecasting now 8 billion? That is a tough one. As I mentioned, Nike with their numbers, oh, look at that one, up by 1.1. They'll be out after the bell today. CarMax, they're trade up more than 10% right now for CarMax. They are higher. This keeps going for Palantir, right? Up another 5.1%. Look at that. Yeah, so they get another deal out there of $600 million in expanded partnership with the U.S. Army. They've been on a run, man. Look at that chart. Whew. Start the year at 15, you ended at 75, up by 5.4%. Let's check in on some of the high flyers. Amazon. There's a pop for you. From 218 yesterday to 224. Amazon up 2% right now. You got Microsoft shares up by 1.1. Apple shares. Quite the slide yesterday, but Apple right now down 0.2% as the market is higher. Pay attention to that one. Tesla shares up by 2.7%. Up over Salesforce up by 1.3. Meta up by 1.5. Yeah, Amazon had some volatility yesterday, man. You talk about it. And the S&P is sitting at that 6,000 mark. We keep our eye on yields and the dollar. We're making just constant highs right now in terms of highs and yields. Yeah, we're now at 4.55%. 4.55. And remember, remarkable that we're now into where we were 2 years ago. You had a low of 108.26. And we're at 108.25 right now. You are below where we were in price in October of 2022. And you got this low hanging out there, which was the doldrums of October of 2023 when we had the 10-year approaching 5%, I believe, at that time. We're sitting at 4.55% right now. And these markets continuing to rise. And your dollar sitting at about 108, and gold continuing down about $40. All right. Talked about Micron. Talked about the Fed. You know what I found interesting? Because you gotta, I wonder, so it's, and not even getting into, of course, everything's going to be political. We got a new administration coming in January 20th. It's December 19th. But I do find it interesting, and I wonder how Trump enjoys these headlines, because I can't recall any time that you would have a incoming president almost second fiddle on some headlines, especially Trump. I just wonder how that's going to play out and how it would play out in the political sphere when Elon controls Twitter, and he is a force on his own, and Trump knows that. But usually it would go private citizen joins incoming president in opposing X bill, right? It's now Trump joins Elon Musk. Usually it's the other way. And nonetheless, it's out there. I saw anytime I pull up, and it is interesting, right, that anytime I pull up Twitter, Elon's the first person I see, period. End of sentence. It's always right there. And what was he doing? He's out there talking about the bill. And maybe that's the case in terms of where that party is going to lie. I'm trying to find I can't find the picture of the bill. Man, he's got a lot going on his Twitter feed, of course. And this is talking about the continuing resolution. But it is interesting that you get, here it is. Ever seen a bigger piece of pork? And yeah, it's pretty remarkable. That's how the laws work, right? Who can read that, etc. That was early yesterday. And yeah, it looks like that's a no-go right now. We'll see where the government goes. I think we'll be okay, but the battle is on with about a month until the next administration. And I wonder how long that relationship really continues on that level. All right, Brazil. Whew, they got some issues going on. You talk about panic selling, man. Brazil spends $8 billion to stem the currency rout. Traders worry fiscal expansion is undercutting monetary policy, and they're selling first and asking questions later. Yeah. On Thursday alone, selling as much as $8 billion in back-to-back spot auctions, the largest in years. It stepped in either directly or through swaps almost every day for the past week. Yeah, the government lacks credibility. The stock market and the real are starting to price in a very complicated economic situation that will be difficult to resolve. Yeah, there it is. They have a huge inflation problem going again. And you got 2-year break-evens approaching 7%. It's running an annual budget gap equivalent to about 10% of GDP, and its gross debt at 79% of GDP. Yeah. All right, let's check out some of the airlines today. They're all catching a bid with this market. United up by 2.4. We get the S&Ps up 44. NASDAQ giving it up a little bit, though. You're only up by 75 right now. You roll over on the open to the tune of about 100 points right now, 21,600. We'll see if it can hold. How about the Dow? Up by 400 right now, and the Russell, particularly volatile, up by 1.3%. Bitcoin back above 100,000 at 102,730. And as I mentioned, Nike after the bell, a little bit of a pop on the open. You're to 77.73. Nike up 83 pennies, and they'll be announcing after the bell. Stay tuned, folks. We'll come back. We'll talk some commodities. We'll take a look at some other equities. Don't go away.
Ho, ho, ho! The Tiger Dollar Holiday Double Bonus Sale 2024 is here. Amazing money! Now through December 23rd, we've doubled the bonuses. Don't miss your opportunity to get a double bonus up to 40% on your Tiger Dollar purchase. Here's how it works. Purchase 500 Tiger Dollars and receive 100 bonus Tiger Dollars. That's a 20% bonus, $600 total. Purchase 1,000 Tiger Dollars and receive 300 bonus Tiger Dollars. A 30% bonus, $1,300 total. Purchase 1,500 Tiger Dollars and receive 600 bonus Tiger Dollars. That's a 40% bonus, 2,100 total.
Oh, wow!
But you have to hurry because this holiday Tiger Dollar double bonus sale ends on December 23rd. Visit the front page of TFNN for details and get your Tiger Dollars today.
Ho, ho, ho! TFNN!
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got S&Ps at 6,000 on the dot as I come to you. We got the NASDAQ 100 up 168, Dow up 408 right now. And we're jumping around this market. I'm going to take a look at this one. So this one from the Journal this morning, okay? And you talk about everybody wants to know where the Fed's going to end up. Not that you want to know. If you know, right, if you can get ahead of the market and know where the Fed needs to end, whether it's on their cuts, on their hikes, and they never end. It's a constant battle. But where's the terminal rate, right? They're still restrictive. They think they're still restrictive. Where are they going to end? Now, and this article titled "The Next Big Fed Debate: Has the Era of Very Low Rates Ended?" Okay, there's your headline, out last night. And what you look at is, let me get right here. This one, okay? The projection of the longer run Fed funds rate. Look at the climb higher. We were at 2.5 for the longest time. We were back at a 4 when you were coming out of the 2008 crisis, but we're now back to a 3. You just went from 2.5 to 3. That's half a percentage point of cuts that you're never going to get because their longer run Fed funds rate now rests at 3 versus 2.5. They're currently at 4.25 to 4.5%, right? So that would mean that they could have potentially 5 to 6 cuts still in their basket in terms of what they could go to. The high estimate of the neutral rate, the low estimate of the neutral rate, it's all over the place, okay? 2.5 to almost 4%. Analysts cannot figure out where it is, and justifiably so. You know, it is the amount of variables going on in this economy, whether there's lags, whether there's not, okay? Yeah. And it is remarkable that you go from where rates are going to settle in the longer run, and they think they could be as high as 4.25 in 2012. Well, what do we find out? No, the market wanted low yield, right? To 2.5% in 2019, but now they're jacking that up because realistically, there's too much going on in this economy right now that if they bring their overnight lending rate down to 2.5%, they could probably cause inflation. They got 2 mandates, full employment and price stability. That's it. Remember that. The Federal Reserve is about full employment, and that can mean a lot of things. Okay, it doesn't mean high stock market prices. and price stability. The unemployment rate's at 4.2%. They need price stability. And they're worried that if they go down to 2.5%, it'll cause inflation, which is remarkable when you think about the change that has taken place on that scale. Now, you jump over to yields, okay? And I'm going to go to the 30-year right now. Look at the 30-year continuing to rise. My goodness, on a 5-minute basis, well below where we were yesterday, and this is what you're seeing, okay? You're seeing longer-term rates adjusting for a higher for longer stance. I'm going to pull up real quick. All right, you get the 30-year now at 4.75%. 4.75. You're up 9 basis points. Hey, the 10-year, look at these yields continuing to rise. Let's jump to the 10-year for a second. Yep. Oh, 108.22. Where did I start the program at? Yeah, we were just at 108.28. We get the 10-year now at 4.56. Okay, so we're talking about higher for longer. Literally, as rates are continuing to make recent highs right now, you get the 30-year with a 113 handle, down from a 116 handle just yesterday. But there's a lot of recency bias. Okay, here's what we're going to say. You look at this chart, and let's just go from 2008. All right, if you just go from 2008 and you look at this chart, risk reward, do you like buying at this price level or selling at this level? And you'd say, okay, I like buying at this level, right? Look at this chart. I'm buying this chart at 113. This is the 30-year. Over the last 16 to 17 years, outside of where we were at the end of last year, there are very few spots on this chart where you have traded to lower price and higher yield on a 30-year yield, a 30-year bond future. Now, the problem is, though, we were in a period of exceptionally low interest rates that we may never see again, at least in the the near future. So that's since 2008. But guess what? You back it up before there. Now I'm going to show you what the chart looks like just from 2008 to 1996, which is as far as it goes on this chart, okay? Now what if I said to you, you're buying at 113? You'd say, boy, this looks a little pricey at 113. There's plenty of times on this chart that we've been at 104. And this is when times were okay, folks, you know? And yields could be higher, and the economy functioned, and we have a recency bias that we were at 0% interest rate for the last 15 years coming out of the financial crisis in 2008. And we are now adjusting to the fact that 0% interest rates will cause inflation right now. We can't do that. And we may not be able to do that anytime in the near future. So be aware that it is possible, okay? I mean, you're talking, what, a majority of 2006. We were at 105. You had 30 years well above. Many times on this chart, we had higher yield and a very good period of time in this economy. Yeah, you had the 2000.com, you had things going on, but it is important. So don't get locked into these last 15 years when, you know, you heard it here, right? You heard us all talking about it. You heard Larry on the air consistently going, negative interest rates don't make sense, folks. Doesn't work. That's not how markets function. And now we've dealt with generational inflation that has gotten 0% yields out of the equation completely, because that cannot happen right now. We will not have price stability if the Fed is spurring that type of overnight lending cost. There's just too much liquidity in the market. But be aware of that, because there's a lot of recency bias that feels like maybe the market wants to get back to a low cost of capital like that, but it's not going to happen right now. And that's what the market's saying, and that's why you're seeing a dramatic repricing going on right now. And I got to update that one. 10-year, no, what are we at? 4.56 already? Just that quickly? $4.57. We might be at 4.6 by the time I'm off the air, folks, in 11 minutes. Now, the good thing is we got some volatility coming down the line, folks. And as traders, you better believe it, man. We got the Fed. We got a new president coming in a month. You have a Fed meeting after that where they're expected to pause. And then they're going to have to start potentially dealing with some of the policies that are new. And how are they going to handle those? Because there's going to be lag even if the policies come in. And with that, folks, don't forget about the Tiger Dollar sale. This one running through Monday. Okay, Tiger Dollar Holiday Sale. We do 2 of these a year. You can get a 20, 30, or 40% bonus, and it's just like a gift card, Tiger Dollars. You can use them for any newsletter, any service. Whether you spend $500, you get $600 for a 20% bonus, 100 extra Tiger Dollars. You spend $1,000, you get $1,300. That's 300 bonus Tiger Dollars up to $1,300, or you spend $1,500, you get 600 free Tiger Dollars. They're applied to your account. You use them, and they're automatically used for future transactions, folks, and we'll send you a Tiger mug as well. Check that out. You can apply them to any TFNN newsletter, and you can take care of that during the break, and we'll be right back. One more segment. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Market's giving it up a little bit right now. We'll see. Only 25 minutes into the trading day, and yeah, you can see the acceleration there. You make it above 6,000, and just like that, you have the S&Ps. They give up half a percentage point. We're below where we were, basically, testing those lows at 9 a.m., and boy, you give this up and you get follow-through. Watch out coming into holiday trading. Now, there can be a preconceived notion that you come into holiday trading and the market might have no movement. A better way to think about it is there's many less participants in the market, and if you have less participants, what's going to happen? You can get wider swings because you have less volume, right? You could actually see less participants that can even out a buyer or a seller. And I'm exaggerating, but to a certain degree. And so you could see some swings coming into this market right now. And yeah, just like that, the NASDAQ 100 only positive by 66 points. The Russell only positive by 12 right now, as yields continuing to rise with the 10-year at about 4.57%. We check back in on the dollar with all that yield. Holding up well at about 108.08, we'll call it, and you jump over to that gold contract right now. GC, you got the gold contract, yeah, coming into the lows yesterday as the yields continue to rise. Keep your eye on those yields, man. Yields in the dollar, because if that move holds and we get follow through, then you're going to see some negative prices in this market today. If we get follow through on yields and if we get a stronger dollar, because the market is repricing higher for longer, coming at you in this market. With a $108 dollar strength, higher yields, and equities sitting right near all-time highs right now. We'll see if they can hold these highs with the S&Ps right now positive by 0.6%. All right, folks, don't forget about Tiger Dollars. Check it out. That sale running through Monday. And stay tuned. We got our man Basil Chapman. He's coming up with the Tiger Technicians Hour. We got our man Steve Rhodes, Larry Pesavento, Jacob Shoup. Stay tuned, folks, and I will talk to you tomorrow. Thanks so much for kicking off your trading day right here at TFNN. And stay tuned. Basil's coming up right now. Have a great one, folks.